Hey there and welcome. Today we're going to tackle a really cool tool that can help you cut right through all the noise in the financial markets. We're going to take those confusing charts and show you how to find a much clearer path forward.
You know that feeling, right? You pull up a price chart and you're just hit with this wall of jagged peaks and valleys, and you just feel kind of lost. It can look like a total unpredictable mess. So the big question is, how on earth do you find any sense of direction in all that chaos?
Well, it turns out there's this fantastic tool that's designed to do just that. And the best part, it's super simple to understand, but incredibly powerful once you know how to use it. We're talking about the moving average. So, what is a moving average anyway? Let's break it down real quick.
Okay, so a moving average, or MA for short, is basically just a smooth line that you see gliding along with the price on a chart. All it's doing is taking the average price of something, say gold or a stock, over a certain number of days or hours. Its main job is to filter out all those crazy short-term price spikes so you can see the real underlying trend much more clearly.
Here's a really easy way to get it. Think about the weather. You don't really care if the temperature changes every single minute, right? What you want to know is the average temperature for the whole week to get a sense of the general climate. A moving average does exactly the same thing, but for price. It's that simple.
All right, so now we know what it is. But why should you care? Well, this is where it gets really powerful for anyone trying to analyze a market.
A moving average really has two main superpowers. First, it helps you see the direction of the market trend almost instantly. You can tell if things are generally heading up, down, or just sideways. And second, it acts as a sort of moving floor or ceiling for the price.
And check this out. This slide shows you exactly what I mean. When you put a few MAs on a chart, they tell a story. Look at the left side. That's what we call a bullish alignment. The faster, shorter-term lines are stacked on top of the slower ones. That's a huge sign of a strong uptrend. Now look at the right. It's the complete opposite. The faster lines are on the bottom. That's a bearish alignment, and it's screaming downtrend. It's so visual, you just see it.
Now for that second superpower. Think of these moving MA lines as flexible, moving zones that act like magnets for the price. When the market's in an uptrend, the price will often fall back to one of the lines, find a little support, like a trampoline, and then bounce higher. In a downtrend, it'll rally up to an MA, hit it like a ceiling, and then get pushed back down.
Okay, theory is great and all, but how do we actually use this to make decisions? Let's walk through a really practical strategy from our source material that they call the first theorem.
So for this specific strategy, we're going to use a special combination of 4 moving averages. The settings are 9, 20, 54, and 72. Each one has a different job, from the super fast one to the slow and steady one. Together, they give us a really complete picture of what the market is doing. So let's quickly see how you'd set them up.
First up is the 9-period MA. This is our fastest line, the one that really hugs the price action.
Then we've got the 20-period, which gives us a slightly smoother but still short-term view of things. After that comes the 54-period. This one starts to show us the more significant medium-term trend.
And finally, the 72-period. This is our big, slow-moving anchor that shows us the major long-term trend. Okay, with all 4 of those on our chart, we are locked and loaded.
So here it is, the core idea of the first theorem. It's really this simple. Once you've spotted a strong, clear trend, the very first time the price comes back and touches one of those moving averages, that is a really powerful signal.
Let's just break it down into 3 easy steps. Step 1. You have to spot a strong, one-sided trend where all our MAs are lined up nicely. Step 2. You wait. This can be the hard part. You wait patiently for the price to pull back and make that first contact with one of the MAs. And step 3. That touch is your green light. It's your signal to jump into a trade going with the flow of that big trend.
And here we go. This chart just shows it all perfectly. Look at this. We have a clear downtrend. No question about it. Now see how the price rallies back up and touches that red MA for the first time? Boom, that's a potential entry. Then it keeps going down, and later pulls back to the yellow MA for its first touch. That's another one. And it happens again with the blue MA. Each of these first touch moments is a high probability chance to join the trend that's already in motion.
So you might be wondering, how effective is this? Well, according to the source material, when the conditions are just right, they claim this strategy has an accuracy rate of over 90%. Now obviously that's a huge number, and you have to remember that no strategy is a magic bullet. But that claim really highlights the potential power you can get from just trading with a very clear established trend.
All right, so let's bring it all home and quickly recap what we've learned today. You've basically just added a brand new tool to your analytical toolbox.
So here are the big takeaways. First, moving averages are awesome for filtering out all that market noise and giving you a much cleaner picture. Second, they give you a really clear, objective way to see which direction the trend is heading. And finally, like we saw with the first theorem, they can help you pinpoint some really high probability moments to enter a trade.
So, we've seen how just a few simple lines on a chart can turn what looks like chaos into something clear and understandable. It gives you a whole new lens to see the market through. This is just one tool, but it's a powerful one that opens a window for you. The real question is, are you ready to start seeing what's possible? Thanks so much for watching.